Hello, I'm Annabel Brodie-Smith, Communications Director of the Association of Investment Companies. And earlier today, I was talking to Carlos Hardenberg. Now, Carlos was appointed Lead Portfolio Manager of the Franklin Templeton Emerging Markets Investment Trust a year ago.
Yes, I was appointed as the new lead manager last year, and of course that meant that we had to do a complete overhaul of the portfolio as a new team came in, and we had to translate our convictions into the portfolio, adhering to the Templeton principles, continuing to have a value orientation with a long-term investment horizon. The main changes really have been related to some sector adjustments. Some of the currency weights have changed quite dramatically. We used to have big weights in Thailand and Brazil. We reduced that to some degree. And we changed the composition of the stocks away from some of the very large big cap names, which are partially government influenced or related, to pure private sector, privately run enterprises in those countries. So I think emerging markets have clearly went through a kind of a perfect negative storm over the last 5 years. It couldn't have been worse in terms of currency adjustments, in terms of GDP declines, in terms of the political crisis that we've seen in Africa, that we've seen in Brazil and in many other markets. And then the big issue about China and the slowing down of Chinese economic development. So that led, in our opinion, to an overreaction in share prices, and it presented us with a great opportunity to buy high quality names at very interesting multiples. At this very point in time, we are seeing a gradual mean reversion. Industrial production is picking up. Purchasing managers' indices are recovering as we speak. And if you look at the new order to inventory ratios in emerging markets, it's also improving drastically as we speak right now. So there's a mean reversion. Still, prices are very attractive. We think this is a time where you should definitely add to emerging market exposure. The most vibrant opportunities in emerging markets are still in Asia. So we're looking at countries like Taiwan, Korea, but also the Philippines and Vietnam, which are very much driven by macroeconomic improvements and by political stability. In the sectors, for example, component suppliers to the automobile industry, also in Mexico and Brazil, we are finding opportunities. In the technology sector, of course, mainly in Asia. But we're finding opportunities almost in every market where we get good access to a growing, fast-growing middle class. And we're focusing specifically on those companies with a better management, which pay out decent dividend yields and which have a sustainable balance sheet. So my outlook for the emerging market asset class overall remains fairly optimistic. I think that it will be a gradual recovery on the back of stabilizing commodity prices, on the back of stabilizing currencies in emerging markets. And I think that the attractiveness of emerging markets as a whole, as these economies are maturing, as these middle classes are becoming more mature and spending power increases, remains one of the most attractive investment opportunities that we can find anywhere in the world. And you need to come with a long-term horizon. There will be volatility over time. There will be another crisis in one or the other country. But if you have a long-term horizon, these investments typically pay off.
Carlos believes investors should focus on the fundamental opportunities that emerging markets present. And when he goes out and talks to entrepreneurs in emerging markets, they're very positive about the opportunities there. Thanks so much for watching today.